So it is Wednesday. It is another good news Wednesday with Tesla up a little bit in the regular hours and a little bit more in the after hours, at least so far. I'm thrilled as usual to have Jeff Lutz here to help me figure out what's going on. How you doing, Jeff?
Good. How are you doing, Randy?
I'm doing great. This morning I saw that Tesla was up like, 5, 6 points and then it fell down. And before it fell down, I speculated that it was because maybe the street, or at least a lot of retail investors that might have been flip-flopping over to Nvidia or something, might have been saying, I need to be there when FSD becomes a real thing. Do you think there's any possibility that's what caused the early acceleration, or what? Did you have another theory?
No, I think the stock, when the volumes are low in the morning, it does do some of these outsized moves. I think a lot of it is honestly controlled by it. It's such a heavily traded stock from an options perspective. So, I think a lot of market makers are in a bit of control. I don't think there's any news per se. I mean, I think, you know, Palo Alto, I think tech earnings, both the concern, for the upcoming Nvidia earnings, and then what happened last night with Palo Alto, which has kind of grown into a very big company in the index. I think that kind of brought the market down. And then you had the Fed, pending Fed minutes, which isn't a huge deal, but yeah, there's a couple of things weighing on the market. But yeah, Tesla kind of outstripped it in the beginning. Again, it's really hard to predict intraday action per se. But yeah, and then rumors again swirling about Elon's ownership. A lot of different things were out there that weren't true. But at the end of the day, I think the market's kind of looking at what's the earnings power of the company, and are any of these new kind of option plays on the closer to being on the horizon or not. I will tell you your comment or your question about FSD V12. There's a very, very small awareness of the thing. I tweeted about this, like the awareness of FSD V12. I love it. I'm into it. I think it's very important. I've been tweeting about it a lot, but I think the awareness is in the thousands. And I think it's really incumbent upon, based on its maturity, I think it's incumbent upon Tesla to figure out how to get that awareness into the millions.
Yeah. Okay. That's interesting. So you think, I mean, it would be a bigger potential dollar volume generator than what's happening over at Chat GPT or any of the rest. I mean, we're talking about something that has a real world monetizable product on a month by month basis,
Yeah.
compared to some of these others. So I would be surprised if the folks out there in that world aren't looking for the next Chat GPT.
Yeah, I mean, well, Tesla doesn't talk about it. They don't split it out per se. You really have to kind of like, you know, you really got to dissect the earnings in a way to figure out like what is the raw, FSD revenue, because there's a lot of other services things that are mixed in. So Tesla hasn't been talking about it. I mean, there's a good reason. I mean, everything up through V11 is, it's not been a product that you would take out of beta and put into mass production. But now you've got these early versions of 12 out there, version 12, which probably has some regression that term we use, regression, in the software world or product world, which is like these are defects or bugs that they should be able to squash out and get rid of. There were regressions from the prior release, but architecturally it looks like we've taken a big step forward. The question is it quantifiable? Does it get you to a different level of SAE performance? I'm not a huge fan of that being the only metric, but is there a metric out there that consumers could understand and kind of grab onto? And like I said, the awareness of this is very low.
Yeah.
I think we had Dan Ives on a space, and he said probably for every 20 fund managers he talks to, maybe one of them brings up FSD. So, the awareness, I think, is very low. It's very high in our, X Twitter community on Tesla, but very, very low outside of it.
All right. Well, speaking of the big news of the day, Nvidia had a home run and they're headed back to their all-time high, at least in the after hours. It's looking like they could even be there tomorrow or the next day. So what did you think about Nvidia's earnings?
Yeah, I mean, I caught the first part of the earnings call, then I had another meeting, but really nothing to pick at. And just exceptional growth, both sequentially quarter on quarter, and then some of the annualized growth. If you look at it, Q4 2022 to Q4 2023 is just, when you're talking 200-400% growth in various areas, and big earnings and revenue. I mean, just unbelievable growth. And it looks like they're guiding for strong growth as well. So, I mean, congratulations to to Jensen, that whole leadership team. They're really hitting it out of the park. And it really, if you start thinking about like, well, what's going to get in the way of this? Well, first off, what was interesting is there was a leading indicator to this call, which was all the other mega cap tech earnings calls where they said like, we're buying more compute. Like we're going to be buying more. Like, Meta said they're going to do it. Google, everybody came out and said we're buying more compute. Now there are competitors that are trying to develop their own solutions, but remember, NVIDIA isn't sitting still. They're working on Blackwell. They're working on H200, which is coming out imminently. Like they're not sitting still. And the first thing that a lot of the competitors are going after is kind of these low-level tensor processing chips, these low-level inference chips. They're not the complete server-side H100, competitive solution. AMD's working on one right now that they intend to ramp in Q2. But then, that's the beginning of their ramp. It's going to take them some period of time to get the scale. So NVIDIA really has this playing field to themselves for a while, and they seem to be improving product at a rate that's just outstripping the competition. Now, and the 77% gross margins are just out of this world. And I could, as they double their capacity going into the second half of this year versus the prior year, I could see their COGs coming down significantly. And the fact that demand is continuing to outstrip supply, they have no impetus, and there's no competitor that's emerged. There's no impetus for them to really get any real competitive on pricing. So they're in a great spot, and they earned it.
So does this make you feel like Tesla should give us updates on Dojo in terms of whether it's still competitive or not, or whether there's a Dojo 3 that will be competitive with these new products that are coming out?
Yeah, I mean, I would say the interim update from Tesla. So it's interesting. Pete Bannon started this team on the inference chip side, on the car side, and they have an NVIDIA like solution where they develop the silicon, the base layer software, everything's Tesla design, and they go send it out to Samsung for fab, and that chip comes in, and we build that self-driving computer and put it in our cars. That's they basically designed NVIDIA out of the car and out of the bot. Where they haven't is on the a network infrastructure side and on the training side, and that's this Dojo 1, D1, D1.5, D2. And yeah, we're not getting the updates there. And I think there's been issues. We've seen a lot of turnover in leadership, and they've put Mr. Bannon over leading that now. So I think they've got to get their bearings right. They've got to figure out like when are they going to be in mass production with and what percent of their compute is going to be Tesla Tesla compute versus NVIDIA compute, and he said they're going to be buying from AMD as well. But I think this it'd be really cool for them to have like a metric of like, here's the compute that, here's all the compute we have online, right?
Mhm.
This many exaflops, and this is Tesla owned, and this is, external owned, not external owned, but externally sourced. And, but we're not seeing it. We're not hearing any of that. So I think they've got a ways to go. And, but yeah, it's exciting that they're working on it, but we'd love to hear more about it in terms of like, when is it going to be a reality? But it's a very difficult space. It's a very competitive space. But I believe Tesla, by doing the tensor processing, the low-level inference processing in the vehicle, they've really given themselves, that self-driving computer in the car would probably been double or triple the price it is today if it wasn't for the work that they did. So now that needs to translate to the network infrastructure side. Otherwise, it's how NVIDIA's got this lock on 77% gross margins.
Right. So on the other side of the earnings calls today, we had Lucid and Rivian with not so great results.
Yeah.
Lucid going to be in business a year from now? Or will the Saudis bail them out again? And what about Rivian? This is not looking good for them. I kept thinking they were going to be the one that makes it, but they're not. Shouldn't they be in profits already?
Yeah. So the one I studied the most, I mean, Lucid's going to be this unnatural thing of like they're either going to get the external support or not. Their business results would say that it's not something you would naturally keep as a business long term. Rivian, on the other hand, obviously they had a good year in terms of year-on-year growth from 22 to 23, and they got up to somewhere in 51,000 vehicles, somewhere in that area. But the problem was the guide. It's essentially flat. I think the market was looking for 66,000 cars this year, which would have been 30% growth somewhere in that area. And I think they came in the mid 50s. So essentially flat, maybe 0 to 10%. That's a problem when you're a company that is burning cash, that is tied to the markets for financing and for cash. You're not generating your own cash. And they had a huge COGs miss in Q4. They're saying it's a one-time thing, but when they were in the 30s, I think, losing 30 something thousand per vehicle, and they're supposed to be taking that number lower, and now they're losing 43, 44,000 per vehicle. So they took a huge reversal on COGs. And these are things that can't happen when you're in this stage of scaling. You've got to have a real control over your costs. I know they implemented a headcount reduction, but that may not even be big enough, given 10% is what you should be doing, quite frankly, all the time. To me, it'd be more exceptional for them. Not that I want to see anybody lose their job, but it'd have to be something bigger and commensurate to some of the losses that they're printing and basically having a flat year. So from a COGS perspective, if they're going to really make huge strides, they're going to have to rip open the design of the R1T and the R1S and say, look, we're going to be doing things differently. Because you're not going to get it from volume growth from your suppliers. So it's not a disaster. It's not like they're going in reverse in volumes, but as a startup, you definitely want to be in a much higher growth stage to support it. But I mean, their valuation, I mean, they're getting demolished in the after hours. So it's not like they're getting a huge valuation above their cash position, but that cash position is going to dwindle over the next year.
Yeah. I wanted to talk to you about a couple of things that are right in your wheelhouse. It occurred to me over the last few days that Tesla has some cost advantages that have not yet been fully realized, and that I don't think the market is aware of, has not really thought through. One of those would be that as Tesla scales, they get benefits from buying better, they get increased efficiencies, they speed up their lines, they come up with ways to cut costs and parts and procedures. You and I have talked about all those, and you've talked about it other places as well. But there's an entirely separate set of savings that I don't think people are looking at. One of those is on their dealer distributor network, or the lack of a dealer distributor network. So they save margin for that part of the business. But what they don't have, what you have when you save that margin, I know this very well because I've sold both direct and I've sold through distributors and dealers. When you take the position of the distributor or the dealer, there's still a cost associated with that. The goal would be it's going to be less of a cost for you to do it than it would be if you hire it done, because you don't have the profit that you have to make at the dealer level. You only have the cost associated with it. And you also should also be able to probably do it less expensively, especially when you are running a massive international dealer network. You should be able to generate savings from the fact that it's a mass-produced service, if you will. Well, I'm guessing, though, that there's a lot of costs building those buildings, outfitting those buildings, hiring, training, all the kinds of things, all the front end stuff that as they grow, there's more and more and more and more of this front end stuff. And yes, they're probably profitable now at some of the first service centers they put in, or the sales and service centers, but the new ones are going in rapidly. So you've got new costs coming in from those that you have to amortize in. Would you expect that over, as things not flatten out, because they want to grow, they want to continue to grow at this 30 to 50% rate, but would we start to see maybe some pretty significant savings from the dealer distributor? Let's call it the dealer network.
It's going to take a couple of years for that, for some of those assets to start really, for that depreciation to start rolling off. Um, but I think you're bringing up a good point. A lot of people don't realize that at the end of, I think 2022, where they built like 1.3 million cars, and now they're essentially nearly double that capacity 2 years later. And yeah, every couple of years they're doubling. And 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 with that, you have to ramp up that infrastructure, whether you're expanding existing service centers or you're building new ones out. But yeah, you're going to be hit with a lot of those costs, now and early on. So I think that's part of what, where Tesla's been taking a few lumps is actually that capacity build out. Um, everything comes down to utilization. Everything that they build, whether it's a supercharger network, whether it's their service network, dealer net, their own dealer network, which is not really a dealer network. It's basically a landing spot for cars that you go pick up. Um, but there's a cost center there, just like there's a cost center for Apple to have an Apple store, a retail outlet, a brick and mortar outlet. There's a cost center for Tesla. But yeah, as these centers become more fully util, it's all about utilization. So I think for Tesla, what's going to be interesting here is, it looks like the consumer uptake on EVs. I mean, if you believe this 60 some percent number that has been reported now on EV growth from January 2023 to January 2024, I would say it's still at a pretty blizzard. We thought it was going to be, sagging into the 20s or 30s. Let's see. We need more data points. It's, just the beginning of the year. Um, but if EVs continue to grow at this pace, that could be the surprise for Tesla, and that could take their COGS structure down faster than anticipated, and it could, potentially improve EPS faster. I think the first thing that Tesla has to do is they have to demonstrate that that EPS is bottomed, and the gross margin piece and the operating margin piece are the big piece of it. And so far now, I mean, what is it today, February 21st, right? We're, essentially 5 weeks left in the quarter, so 5 or 6 weeks. And I would say from a COGS perspective, I would be surprised if they're not ahead of the MSRP reductions that have been taken to date. I would be surprised. I would be surprised if they're not ahead of that from a COGS perspective.
So that would be an overhead, of course, all the service center expenses and
Yeah.
the showrooms and whatnot. But then on the COG side, they're a vertically integrated manufacturer. I have probably mentioned on the show before, I wrote an article for Inc. magazine about going from virtual to vertical. Literally, my plastics manufacturing company didn't even have a building. It didn't even have offices of our own. And we went to 100% vertical on all the processes, from manufacturing to printing to everything else. So they've done the same thing. And it's a little tricky to put that advantage on a spreadsheet. Tesla's not paying the margin to the OEM supplier. So somebody makes whatever product, take any product, some of the components in the seats, are even the software. They're not buying the software from somebody else and paying them a 70% margin. They're not buying a seat from somebody else and paying probably a 20% margin. So this reduces their cost of those things in many, many ways, including quality control. That's the main reason I made the switch. I think that's the main reason that Elon made the switch, was quality. He couldn't get the quality he wanted from the OEMs that were available. But
the other thing, Randy, is when you do the COG, when you own more of the process and then you do the COGS reduction on that process, you get 100% of the reduction. If you outsource that part, let's say it's a door handle, and let's say that you help them simplify the process, maybe you reduce a plating step, they're going to take part of that margin themselves. And actually, part of their plating, probably their plating supplier is going to take some of that margin. I mean, you may be sharing that with 2 or 3 people, but if you decide to build that part yourself, you're essentially, when you have COGS reductions, you're taking all that benefit to your bottom line versus sharing it.
Right. And in making that decision and making that, if it's based on quality or based on it's just not even available, sometimes you're actually not going to get the benefit right away. So for instance, maybe the manufacturer of that door handle can make that door handle for $1. But when you first start, and I'm sorry, make it for $1 and sell it to you for $1.20. But when you first start making it, maybe it's costing you $1.25 to make it because you're not making the same numbers as that manufacturer.
Right.
You don't have all the costs out of it like that manufacturer. But
Yeah.
then over time, as you get your numbers up, you're going to start getting that number down to maybe 80 cents from that $1.25, because you're going to make it better than him. You're going to make it in-house, et cetera, et cetera. So those numbers, I'm thinking, are probably also not fully really in the margins that we're seeing yet today.
Yeah. I would say that I don't see Tesla doing a much larger shift of what they buy externally versus what they make internally. I think, but yeah, I think your point's valid, especially when you're in a COGS reduction mode. If you're making more of the parts yourself, you're taking 100% of the COGS reduction to the bottom line. I think that's where, in the Ford and GM model, it's almost a flip the inverse of Tesla. They're 80% on the outside. And yeah, that's part of the issue. The other part of the issue, it's not just the price you pay for the part, is if you actually take the network analysis of like where does this thing start as raw material and when does it end and you look at that time, if you can take that time down and condense that time, you're controlling the demand signal and supply signal better, and you're having less excess, less obsolescence, less of the wrong stuff, more of the right stuff. And that's a big part of the cost. It's actually hard to measure.
Yeah, I understand 100%. And then, so I thought, I looked at the 4680 battery as something that would be an amazing example of both. So right now you've got a tremendous amount of money going out into the research and development, into the capital expense of building the refinery, of building the cathode plant, of putting up all the lines and learning how to run them. And so those now expense, which we would be seeing, right now as part of the margins and overhead. But those things, that's going to be coming down like crazy once we get the refinery going, once we've got the cathode plant rolling, and once we have the batteries actually being produced.
Yeah. And the other thing is with besides the overhead side of it, the 4680 is probably not at the defect rate. It's not at the velocity that they have for target or peak production. So anywhere where you're gapped between your peak production target is a cost opportunity. It's fairly significant actually. And the other thing I don't think Tesla or anybody anticipated is that just the drawdown in the external battery market, both from a raw material perspective and a conversion perspective, a lot of auto OEMs put big numbers on CATL and some of these battery suppliers, and they went and bought the capacity, and then these OEMs walked away from it. Volkswagen, Ford, GM, a lot of even the Chinese overbuilt capacity in that space. So that's another big implication. It's actually helping Tesla on the battery side right now. But as that capacity tightens up again in the future, it's better for Tesla to have their own operation. Again, they're not paying a margin to anyone, and they can keep their supply base in check of like, look, if you try to do something weird, either with lead times or with costs, we're just going to crank up more of our own supply.
Right. And I was trying to think of it in terms also of just the current P&L. The numbers right now would be going out and costing us on the P&L, whereas 2, 3, 4, 5, 6 quarters from now, we should almost constantly be seeing less and less outgo and more at some point income, or net.
Yeah. Yes. Yeah. But they got to get the volumes up too to spread more of that fixed cost. Yeah.
So I've got this question. This is another question that I think you would be just the total in our community, at least the expert on this. Ford and General Motors, both of them gave good guidance. They both thought that this would be a good automotive year. I'm beginning to hear a little bit of conversation that maybe not so great. What are you hearing out there? Are you hearing one way or the other in terms of whether the overall auto business in the US or worldwide is going to be okay, not so great? What?
We gotta get the real-time inventory numbers and then any VIN intelligence. I think it's a mixed bag, to be honest with you. I think Roland put some numbers out this morning for Europe that says BEV adoption is ahead of last year at this. It's only 1 month, January 2024 versus January 2023, but BEV adoption is ahead of significantly in Europe, is ahead of where it was the prior year. And Tesla, I remember him saying we went from like 10% of the mix to like 14.5% of the mix. So there's some promising data points out there, and then there's some concerning data points, but it's kind of a mix. It's a mixed bag everywhere, and that's usually how the first month of a quarter is. The first month of a quarter is, and this is why some of this data out there is kind of dangerous, because OEMs do different things at different points of that 90-day quarter or the 75 days they have to build. And in the early part of a quarter, they tend to be building up inventory again and really trying to understand what the run, what sales velocity they're trying to get to, and if they have to do any promotion activity. But I think I heard a lot of people getting concerned, like, oh my God, the inventory, but Tesla inventory is so low. I get concerned that it's so low that it's actually limiting their sellout velocity, because there's data that says that when people have made the decision that they're going to buy a new car, they want to do it in like within 5 to 7 days. And when you're running 15 DOI with half of that, 15 days of inventory with half of that being in transit, you're basically barely in that window, and you're probably stocked out in most locations. So in terms of macro auto, though, I think we got to keep an eye on the inventory numbers. That's the key thing. And then what are they doing? It looks like the average transaction price for January was like 3 or 4% lower than the year prior in January. That's a big number to look at. And then we got to watch the inventory levels. So they all came out. They just had their earnings, right, Randy? They had their earnings 4 weeks ago,
Right.
and they all said that we're anticipating a strong year. So, man, to be, just 3 or 4 weeks after that, to be that wrong would be really a bad thing for them, I think.
Okay. So on the economic side, the Federal Reserve, the minutes came out today, and more Federal Reserve officials signaled concern at their meeting last month with cutting the interest rates too soon and allowing price pressures to grow entrenched, as opposed to the risks of holding rates too high for too long. Overall, the minutes didn't move the markets very much. A little bit down. The equities were down a little bit. The bond yields were up a little bit, but not really.
There's an auction today too, Randy, right?
I'm sorry?
There was a bond auction. There was a bond auction
Oh, I
today
didn't
too. I
notice
think
that.
that did not go well.
It did not go well.
Yeah. I forgot which, I don't know if it was 7 or 10 year, but it didn't go well. It caused a momentary spike, and then it came down a little bit. It seems like the whole like Nvidia earnings kind of controlled the market, but you're right. They had the Fed minutes weighing in there, didn't do too much movement, but there was a bond auction right at that time too. That did not go well.
Okay. All right. Well, that's interesting. I need to follow up on that tomorrow. So right now, it's sounding, I listened to so many different people giving their opinions today, or read so many people giving their opinions. And it seems like there's kind of a general consensus about higher for longer with zero growth this year, possibly dipping negative for 1 or 2 quarters, is becoming kind of the consensus I'm hearing. Is that what you're hearing? Do you hear it differently? What do you think? Do you think that's what we're looking forward to for the rest of this year?
No, I think we listen to a lot of the same sources, but the question is how accurate, have they been? We've been beating the drums for recession for how long? And, we left the year at, between 3 to 5% growth, right? Depending on Q3 and Q4 GDP growth in the US. So the issue is going to be abroad. I mean, Japan, Germany, UK. Question is there
China.
something else happening there where, they catch a cold and they sneeze and we catch a cold? China, of course. Um, but yeah, I mean, could we dip? I mean, could we dip to negative growth? It's possible. I think it'd be a real issue in an election year, by the way, but they can't control everything with labor and statistics. So it's going to be interesting to watch. But if it does dip negative, I think it's pretty shallow.
Okay. Short and shallow.
Yeah.
Okay. All right. The Fed, are you are you like I am? I'm screaming in my sleep saying you got to cut the rates in March, but you're not gonna. Or do you think they're okay to leave them higher for longer?
Yeah. The difference for me between March and May was pretty nominal. Um, you know, Obviously the bullish side of us would like to see them cutting sooner than later, but cutting for the right reasons versus, there's something broken in the economy and they're trying to get in front of it. Um, so I think it's interesting. It'll be interesting to watch what they do. I don't think we're gonna get any surprises in March. But it'll be interesting to do what they do with quantitative tightening and the rates together. Is there a move coming up, especially with the election? Is there a move? Is there a move coming up or not? Again, on paper, they're supposed to be separate, but you know,
And which and
we-
as I pointed out a couple of times before, whatever they do, it can look political. So
yeah,
if you cut the rates, that looks political. If you say you can't cut the rates because you don't want inflation to get hotter, then that could look political as well. So you're kind of
yeah,
either way, you could make the case. I can make the headline either way.
yeah. And Powell's been kind of a straight shooter. He's perceived as a straight shooter. He's a registered Republican, although the vice chair went to the Biden administration recently, Lael Brainerd. So who knows what's happening? I think they're playing it straight, but I've often said I've been the one saying for the last 2 years that there's no way that they're going to let this rate hiking regime go well into 2024, and that they're going to have to start cutting, in advance of the election. Otherwise, it's just going to be like, the people with deep pockets are going to really start saying, "Look, we need a change here. We have to fix this." Um, but yeah, again, on paper, is there supposed to be interaction? No, but in reality, I would be surprised if there's not.
I'm sure there's some whispering taking place.
Yeah, right,
Maybe a little louder than
right.
whispering. So Nvidia's up 58 in the after hours, 58 at this point.
Nice move.
So maybe they're back to all-time high before they open again tomorrow morning. Tesla is up 93 cents in the after hours, so 195.70. So that's not too bad. Who knows what that'll mean for tomorrow morning? And let's go ahead and take a look at those bonds. You were just talking about those. Let's see what's going on. So the 10-year is actually down 2/10 of a basis point. So in fact, it just changed to unchanged. It makes it so much easier to say. So it's unchanged. But guess what? Everything else is spreading out the inversion again. So all the rest of them are up, including the 2-month is up 2.5 basis points. The 2-year up almost a basis point. Does this worry? How do you feel about this inversion just staying almost as a constant now for, I think we're getting close to 20 months? Do you have any feelings at all about the inversion?
I mean, it's definitely indicative that the bond markets are screaming recession, but to what depth, it's not clear. But yeah, you'd want to figure out, is there a way to clean this up organically? Can this be part of the soft landing? It almost has to be. And then how do we ultimately get there? So it's going to be interesting thing to watch. But yeah, that's the bond market screaming recession. It just it's just going to be a matter of when and how deep. But I'm saying, yeah, probably, but pretty shallow and pretty quick.
All right. In the oil field, we have oil sitting at $78. So pretty much right at the very top of its recent range. I was hoping maybe this morning it looked like we were coming back down into range again, but now we're kind of at the very top. Do you anticipate anything happening in terms of the oil patch? Do you think we go much higher or much lower, or do you think we're in a range for a while?
I think we are in a bit of a range for a while, unless there's a big movement on supply, or some of these economic tensions start accelerating, in Western Europe or China. But I think we're in a bit of a range for now.
Natural gas has bounced back some, but again, that's one of those situations I think where it was so bad, it was so low, something had to happen. So we're back now in the $1.75 range, which is up from $1.53, which is pretty strong, but it's down a full percentage in the early going tonight. Natural gas, same thing. I don't know. I wouldn't want to call it range bound. Obviously, it's come down 50% or something in the last 90
Right.
days. But I don't see how it goes much lower.
Yeah. I don't either. Again, unless there's some significant economic headwinds.
Okay, dollar is flat. Gold is flat, sitting at 2035. Again, kind of in a range. Bitcoin down 429. So 51.7 though, so still very close to its high. Any thoughts on Bitcoin's crypto, any of the monies?
I mean, I think if it, retakes 53, it's, technically it wants to go to 57 then. So that would be interesting. I'm not a direct player in this, but indirectly, I'm definitely looking at the miners and trying to understand if there's some opportunity there. But yeah, I think technically it's got to retake 53, and I think it can. So, but who knows? Um, it's definitely a great relative strength this whole year.
And we wouldn't be able to guess what the Nasdaq is doing right now, right? So the Nasdaq
Exactly.
Nasdaq is up 199 in the pre-market. S&P is up 30 and the Dow is up 25, but the Nasdaq, of course, on the back of Nvidia. So people are concerned about the top 10 stocks being a bigger part of the overall market than ever in history. And also that the top 10 stocks are worth more than almost all of the country stock exchanges, any individual, even the German, I don't know, I forget which ones, but they went around and looked at some of the other stock exchanges in the world. And the top 10 stocks in the United States are now worth as much as these entire stock exchanges in almost every country. Does any of that
Yeah,
bother?
but these companies are creating. Yeah, I mean, yeah, no, I mean, these companies are clearly creating tremendous wealth. They've had tremendous earnings. I mean, I think of the top 10, I think Tesla was the only one that had, struggled on their earnings. And you saw what Nvidia, just the last one to kind of cap it off with tremendous earnings. So if you're thinking about this on a global scale, I mean, look at the center of the world for AI hardware is Nvidia. The center of the world for large language models and software development is, OpenAI and, and Microsoft and the work that they're doing. The center of the world for EVs is Tesla, followed very closely by Chinese brands. So you think of these large secular growing memory. Memory is a little bit more distributed. You've got, and that's going to be a huge growth with Micron, Samsung, Hynix, and so forth. But that's a little bit more distributed globally. But you've got Google with search, you've got Apple, Broadcom, Avago on the. It just it is coming out of the U.S. There's no question about it. So, and these, I'd be more concerned if it was just multiple expansion, but these companies are really putting up the earnings, and that's the key, and that's where Tesla needs to get back on that horse. And I think once they get back on that horse, and then one of these option plays hits, whether it's real global FSD expansion, whether it's obviously the model, the compact vehicle, or the bot, any of these option plays really start to hit and take hold, then that's where I think it gets re-rated.
Yeah, so we could have any of those hit between now and my theory, my 2026 theory So I don't know if you've seen any of the stuff I've done on the 2026 idea, but the theory here is that all of those have a very high percentage likelihood of being true in 2026. So whether it's FSD or the bot, the Gen 3, Cybertruck ramp, semi, I mean, just to go down the line, I've got 10 items on that list. The likelihood of all of those being actually executed and doing something in 2026 is high. Some of them are almost 100%, some of them less. But that as we get closer and closer to 2026, it'll become more obvious to the market that all of those things are now in play. Does my theory make any sense to you?
No, it does. And I would think well before that, the market should sniff that out, and want to be ahead of it versus, waiting for that first print when there's massive amounts of either data center revenue or massive amounts of the compact model revenue or so forth. I would think they would want to get ahead of it. So that's why this is going to come upon us, I think, pretty quickly. We're already through the first quarter, essentially, of 2024, and you're talking, 4 or 5 quarters, you're going to be thinking about 2026 outlook. You're already starting to get into 2025 outlooks after the spring of this year. So it's going to move pretty quickly.
All right. Well, good news. We'll end on that good news. So,
Yeah.
thanks, Jeff, for coming and helping us with Wednesday night good news. And may hopefully all of the things that we just said will come true, because I think everything we talked about was positive today.
Yeah. I mean, there's definitely headwinds, but definitely a lot of opportunity out there.
Okay. Thanks again for joining me. And for all you folks out there, it's been great talking to you.